I am not a professional financial advisor. The information shared on this channel is for educational and entertainment purposes only and should not be considered as financial advice. Always do your own research before committing any money to the stock market. Folks, if you're serious about making money in stock market, then watch this video till the end, because defense stocks are proving to be one of the most exciting opportunities in the market right now, especially for investors who are looking for the kind of growth that can turn a small portfolio into a life-changing fortune. And today we are diving into 3 defense stocks that have the potential to make you rich. These are not random picks pulled out of thin air. They are companies with real revenue, strong strategic partnerships, innovative technologies, and the backing of investors who understand their long-term potential. Before we start this video, make sure to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on the list is Satellogic Incorporated, trading on the NASDAQ under the ticker SATL. Satellogic is a vertically integrated geospatial analytics company that specializes in delivering real-time insights for consumers, governments, and industries all over the world. In simple terms, this is a company that builds, launches, and operates its own satellites, and then sells the data and analytics generated by them to clients who need accurate, timely information about what's happening anywhere on the planet. The technology is highly valuable in defense and intelligence, environmental monitoring, agriculture, infrastructure, and disaster response. What sets Satellogic apart is its AI-first constellation, a network of satellites designed to process and deliver information faster than traditional systems, enabling clients to act quickly based on near real-time intelligence. Financially, the company's performance has been equally promising. Revenue for the most recent quarter rose 27% year-over-year to $4.4 million, showing that demand is growing steadily. Even more impressive is the fact that operating costs and expenses fell by 41%, a clear sign that the company is managing its resources efficiently and is on a path towards scaling profitably. With $32.6 million in cash on hand, they have the liquidity to fund new projects, expand the satellite constellation, and invest in advanced analytics without rushing to raise capital under unfavorable conditions. With a current share price of $3.48 and analysts projecting an average target of $5.10, with a range from $5.05 to $5.25, investors are looking at a potential upside of nearly 45% in next year. Given the recent contract wins, operational efficiency, and strategic positioning, the upside could be even greater if they continue to execute at this pace. Next up is Smith & Wesson Brands Incorporated, trading under the ticker SWBI. While this is a very different kind of defense company compared to Satellogic, it's one that has been a staple in the firearms industry for over a century. Smith & Wesson is one of the most recognized and respected gun manufacturers in the world, supplying handguns, rifles, and other firearms to both civilian and law enforcement markets. The brand's legacy in the U.S. firearms industry is unmatched, and it has consistently held a dominant position thanks to its reputation for quality, innovation, and reliability. The stock has had a tough run in 2025 so far, down 21% year-to-date, with much of the decline coming in the wake of its fiscal Q4 earnings report. In that quarter, the company reported an 11.6% year-over-year decrease in net sales, with non-GAAP net income dropping from $22.1 million to $9 million. Gross margins also fell from 35.5% to 28.8%, reflecting the pressure of softer demand and broader macroeconomic challenges in the industry. However, the recent quarter shows that the company may already be turning a corner. Net sales came in at $129.7 million, up 3.8% compared to the same quarter last year, and a remarkable 46.8% higher than the previous quarter. Gross margin improved to 26.6% from 25.4% in the prior year's comparable quarter. GAAP net income was $4.1 million, up from $2.5 million, while non-GAAP net income was $4.8 million. Smith & Wesson's management remains confident in the long-term outlook. Currently trading at $8.14, the stock has an average analyst price target of $9.67, with estimates ranging from $9 to $11. This implies an 18.8% potential upside, but if the industry stabilizes and consumer demand strengthens, the recovery could be much stronger. For investors looking for a defense-related play with a well-established brand and the potential for a rebound, SWBI is worth watching. Last on our list is Planet Labs PBC, which trades on the NYSE under the ticker PL. Planet Labs is a leader in global daily satellite imagery and geospatial solutions, with a client base that spans defense, intelligence, government agencies, and commercial enterprises. What makes Planet Labs unique is the sheer scale of its satellite network and the frequency of its data collection. The company's satellites capture images of the entire Earth every day, providing an unprecedented level of situational awareness for clients in agriculture. The company's financial performance has been impressive. Revenue in the most recent quarter hit $66.3 million, beating expectations by nearly $4 million. Even more notable is that Planet Labs achieved its first quarter of positive free cash flow at $8 million, a major milestone for a company in a growth phase. Demand in the defense, intelligence, and government sectors remains strong, and the company has strategically partnered with AI leaders like Anthropic and Google to enhance its analytics capabilities. The stock reacted positively to the earnings news, jumping nearly 4% in regular trading and over 5% in after-hours. With a current price of $6.65, analyst targets range from $6.50 to $8, with most firms maintaining buy ratings. The future potential here is significant. As the demand for real-time, high-quality geospatial data grows, particularly in defense and intelligence applications, Planet Labs' comprehensive coverage and AI integration give it a strong competitive edge. The partnerships with major tech players suggest that the company is not only expanding its capabilities, but also positioning itself as a leader in the AI-driven analytics space. Well, that concludes our list of 3 low-price defense stocks that are not only backed by strong fundamentals, but are also positioned for substantial growth in the months ahead. Whether it's Satellogic's AI-powered satellite constellation, Smith & Wesson's enduring brand strength in firearms, or Planet Labs' leadership in daily Earth imagery and AI analytics, each of these companies offers a unique way to gain exposure to the expanding defense sector. As always, remember that while the potential rewards can be significant, investing carries risks, and it's important to do your own research before making any decisions. But for those ready to capitalize on the next wave of defense innovation, these are stocks worth keeping on your radar.